Hello and welcome. My name is Oscar from the Finance Society at Stockholm Business School. Today we're going to talk about support and resistance in the technical analysis. Both these areas are important in terms of market psychology. The areas where people are willing to buy the stock, these are the support areas where a lot of people just generally think, this looks cheap, I'm just going to buy the stock. Those are the support areas. And when people are willing to sell it, because it looks expensive, it just feels like this is expensive, it just looks wrong. That's the resistance levels. When these levels are broken, you can think of it as a bit of the market has changed or shifted, and then you need to look and find new support and resistance levels. First off, what is a resistance level? The resistance level, as I said, is where people are willing to buy to sell the stock in case of resistance. Here we have Burberry from the London Exchange around the 1,600 area. We can see that the stock has struggled to getting past 1, 2, 3, and the fourth time it actually got past 1,600. And this is a typical resistance area. Here we have another big indicator, the round numbers. We have round numbers as well. At 1,600 here, it's a round number. It's not the biggest round number. 1,500 would have been a better round number. But say 10, 25, 50, 75, 100 are all big round numbers that when the stock falls from, like, say 100, 120 down to 100, people think, it's close to 100, it's cheap, I'm just going to buy it. And on the other hand, when it goes from like 80 to 100, you think, 100, that sounds expensive. It's the same thinking as when you go to store and it's 99 kroners instead of 100, because it looks cheap. It's the same thing with stocks. When it goes to 100, it looks expensive. Instead of 98, it looks kind of cool, but it's still not 100, because 100 is more expensive than anything, just because it's three numbers. Yeah, and I thought we were going to look at some different charts where support and resistance are very easily seen. We can start with Burberry. Here we have 1, 2, 3, and 4 times it hit this 1,600 level. Every time it hit 1,600, it went down almost 2,000. That's a quite big decline. Up to 1,600 again, couldn't go through, went down to almost 1,000 again. And then third time we actually pierced the level, but we still couldn't establish over the level, and we fell back down to 1350-ish. And then this fourth time we consolidated a little bit under it, and we actually got through it, and now we established over 1,600. I would say now that 1,600 is a good support level. So if we would go up, say, to 1,900 and then just go back to 1,600 would be a great area to buy. That is the gist of the role reversal, because first it's very hard to get through 1,600, then we actually make it through, and now it will be very hard to going under 1,600 again, because there's a lot of momentum and not momentum, but great support here in terms of the psychology behind the Burberry stock. I have a couple lined up here. Let's look at Volvo. Okay, we're going to look at the round numbers. As I said before, the 10, the 20s, the 25, the 50s. When I started trading back in 2009, I just realized that these whole round numbers are very, very good to look at. So I started to draw up on different charts, like draw out the 100 line, the 150 line on some stocks. And Volvo's 100 line has been very good. Actually been giving me quite a lot of trades. First here, the start of the 08 crash, we got it to 100, we fell down. We went back up. This is still a very good resistance line. As we see, we pierced it and we fell back to, that's a 10% drop. So 10%, we shouldn't be too fussed with 10%. 10% is very good. But as we can see, it just went up, went down. It just consolidated just below the line, and that's not the best action we want for resistance. We want it to go straight in and straight down, which we will see in some other charts. But the 100 line is very good, showing the role reversal, and it's a Swedish stock, so you might be more familiar with it than say an American stock. So we hit 100. We actually go through it. Now it's the 100 is a support area instead. So we go down and we bounce up. We go down, we bounce up, and then we go through, because we will eventually go through. And this is the maybe fourth time we actually test this area out. And as we see here, we actually went through to 95, and then we went back up again. This was all during a week, so I wouldn't call them support lines or support resistant lines. I would more call them an area where the bounce is going to happen. So I would say the line plus minus, like, let's say 2.5% on a weekly chart, of course. If you're trading the 10-minute chart, then of course we're going to have a smaller area where it's like the line plus minus 25 cents of a dollar on an American stock. Then went down, back up to the area, couldn't go through, went down to 70 again. That's a 30% drop, so it's a big drop. That's good gains. Then back up to 100, couldn't go through. We actually pierced it, went back down to 85, back up to 100, couldn't go through, back to 86, up to 100, went through, pierced it, went back down to 80, back to 100, pierced it, stayed a month above or around, because we were never more than 105 kroners. So I wouldn't say we established above the 100 kroner line, but we were just there and just chilling. And then we went back down to, again, 70, and now back at 100 this week. Couldn't go through, back at 95.20. This is a great example of a long-term resistance and support area, because when we're here, it's a support area, not a resistance area. This is Walmart back in 2003 to 2008. The level is 51, so almost 50. 51, great support, went up, down to 51, up to 60, down to 51, up to 60, down to 51, broke through, up to 50, down to 40, 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 up to 50. Broke through again, shot through, and just to show you it's not always going to work. Now the line is kind of broken, not used anymore. But during, what is this, 5 years? If you just have been trading the 51 line, you would have made a lot of money. And this is just how the role reversal works. First it's support. When we break the support, it's now resistance. We're going to look at what I meant with going straight into the line and just consolidating at the line. Goldman Sachs, 72.90. Here we go. This is the area. As you see, we see if we can do this. There we go. We went from this. This is just a significant bottom, and as you see, we just went straight into it, and from a straight into a support area, we're gonna most likely see a bounce. If delete segment. If we would have gone down here and then just sideways, this line wouldn't be major support anymore. It would just be minor support, and we would most likely just break through. So it's all about how you get into the level. You want to go as straight down as you can. Fast market, fast bounce. If it's a very slow market, it can either be a very slow bounce, like here, we actually went through, consolidated. It's still support, it's minor support, and we bounced. So you want to see these aggressive moves down. Those are the trades you want to take. We're going to look at chevron. Major support, big bottom. We went straight through, straight up, and here we started to consolidate at the line. The support is not good anymore, especially when we gap through, but just ignore that for now. We just went too close. We're too close to the line for too long, so eventually we're going to break through. In hindsight, we just went back up, but you can't know this. When you're very close to support level for a long time, on a 10-minute chart like this, 2 days is very, very long time. Then this area is not sound anymore. So the first bounce is very good. The second time, not so great, because we're too close to the line. Okay, here we got Southern Copper. Now we got to look at the 200 moving average. The 200 moving average is a very important support and resistance line, and we're going to talk more about that in the future. It's just the last 200 closes divided by 200, and you get an area. So it's just a dotted line, and then because I don't like dotted lines, I just get it filled in. So this dot is the last 200 closes divided by 200, and it's at this line. So at this line there will be resistance, and as you can see here, we went straight into it, we went down, and again we're very, very close. So we went back up, we pierced it. This time we actually went down again. We're still very, very close, and this time the line couldn't hold, and we just blasted through. So what we can see from this this action is the buyers bought it up here, the sellers came in, pushed it down, went back up, the sellers sold off again, and this time the buyers won, and it blasted off because the sellers couldn't cope, and the price went up, and the resistance is now support. We went down. This time the support didn't hold. Again, this is a daily, so for about 2 weeks we're under, and then we went back up again. This just shows how the importance of going straight into a level and just consolidating around the level. Because when we consolidate, we will break through. Of course, we can break through on a direct hit as well. It's just not as likely as if we consolidate around the level. I think that was all. I hope this was somewhat informative, and next time we're going to talk about trends and trend lines, which again is a kind of a support and resistance. So I hope you took something away from this. Have a good one. See you next week.